Yo, it's good boys, Charney here, and I'm going to be calling this GBP NZD trade losing before the candle even closes here on the 30-minute time frame, to prove to you guys that the LSD entry model, some of these trades can openly just purely be skipped because of the market price action, and you guys aren't being taught that, um, and this is the stuff I teach, so I'm just going to show you guys it losing before this bullish candle even closes, before anyone even takes this trade. The outcome's already pretty much laid out. And yeah, let's just get into it here. So if we start with the actual entry model, right? A lot of you guys know the LSD entry model, right? Trending markets, and you want to see a sweep of liquidity, right, of some sort, and tap into a demand zone, and then from there, when it's valid, take the trade, right? So this is exactly what you see here. So let's just clear this stuff up here quick. Clear everything up. Chart is just open. It has no makeup on it. It's just, raw charts. So from here, you have your demand zone, right? And beautiful demand zone, right? You have nice liquidity right here. Beautiful liquidity. And everything's there, right? Everything looks pretty solid, right? Waiting on a bullish candle close. We have about 9 minutes left. I'll get into the trade save here into a second. But yeah, it looks fine, right? Everything looks fine. Okay, so let's zoom out a little bit. Okay, do we have trend here? Oh yeah, we have bullish trend, right? Everything looks fine. This trade looks A plus. What's not? So let's zoom out to an actual higher time frame to get the idea of what's actually happening, and you start to realize, well, okay, wait a second, we actually have a bearish trend. Okay, cool. What did we have to feel throughout here? What did price do throughout here? Well, it ran inefficiently, right? It ran with a lot of inefficiency, which it left imbalances within the market that need to be filled. Okay, did we fill those imbalances? Yes, we filled those imbalances, right? So all of these imbalances have been filled. Okay, where exactly can we react from here? Well, we can react from realistically anywhere around here, but our main reason for price to retrace was to fill in these imbalances here to the left. So if we go to the daily time frame, we can mark out our order block here that we have to the left here. Drop back down to, let's just say, the 1 hour time frame, right? Get a rough idea of where that is, right? All of these imbalances to the left have been successfully filled. We are reacting off of a daily order block, this rough area up here to the left. And overall price action is bearish, right? We're seeking lower prices, right? And eventually, right, price runs down really hard, runs down inefficiently, gets overextended, and what do? We have a retracement, just like anything within the market. So we have that retracement to fill in all these imbalances to the left, and we start, again, filling in those imbalances and reacting off order blocks and stuff like that to the left, and we start getting to an area where price is most likely to then just continue the trend from here. So, yeah, so that's the technicals on the very basic side on the higher time frame. Okay, let's get into the fundamentals here. So let me get to the fundamentals tab on trade save, and you just simply type in GBP NZD, right? You can see actual bias is slightly neutral, right, but it's still down 4 points. Okay, I'm gonna wait for this AI to give me a full entire summary on why it's bearish and stuff like that. You guys can pause this video and read all through this, or you can look at the overall outlook. GBP NZD remains neutral because UK inflation relief is offset by structural energy shocks, unfavorable seasonal headwinds, while NZD faces its own growth and inflation pressures with no clear monetary advantage. Strongest bearish drivers are trend deterioration, seasonal weakness, and persistent inflation expectations. And you guys can, again, read the rest of that. I have already read this on my MacBook here. Yeah, so we have that. So then if you draw down to lower time frames, from here, you have, if you turn on session highs, you realize, okay, well, price has manipulated this last high. It's a previous day high. It holds lots of liquidity. Price has manipulated to take all of that liquidity to that buy side, right? So internally, price has taken pretty much all of the liquidity above you, right? It has taken all of the liquidity above you. It has manipulated this last high. It is not closed above it and displacing past and showing that price wants to put in higher highs. None of that. It is purely manipulating this last high as a previous day high and manipulating it and seeking deeper liquidity, right? Where's your kind of your first level of deeper liquidity? Your first level is realistically right here. So when we take that level, is it going to give a reaction? Yeah, it's going to give a reaction, right? That's what you're seeing on the chart right now. So what happens is it gives an entry like this, and people will get into this trade, right? And target, I mean, that high is a little bit low. I feel like a lot of people's going to be targeting higher highs here or something. And what's going to end up happening is with everything I showed you, the fundamentals not clear bullish bias pushing price higher. It's not a clear bias at realistically at all. Paired with the technicals I showed you, we filled in every single imbalances. We need all the imbalances to the left. We need to. We have a daily order block here to the left where bearish price action came in before, right? We are clearly respecting that after filling in all the imbalances. We have manipulated all of the liquidity up to the sell side, right? We manipulated, or up to the buy side, I apologize, up to the buy side. We manipulated all of this liquidity. And now we seek down to the sell side and we take that liquidity, right, and we give a reaction. And based off wherever this candle closes here, then that would be, a valid entry. So based off all of those things, and just the trend overall, I see price chasing lower prices. And what can easily happen is you go to the 1 hour time frame, you have a 1 hour fair value gap here. You have an imbalance where price ran inefficiently down. So we could easily see something like this where price comes up, taps into that. Maybe we chase a little higher up to this order block, right? And I think overall what you're going to see is price end up dumping. Or if it doesn't do that, right, we don't have to chase to this imbalance. No one's telling it has to chase to this imbalance, right? This is just an area where price could theoretically internally chase to before price follows through with bearish price action. Or if it doesn't, right, then we could just immediately start seeing that bearish price action kick into play here. But if you guys just use a little bit of market context and zoom out a little bit, we're kind of clearly bearish. So, understand the theory behind this trade. What's your theory behind this trade if you're taking this trade? Well, your theory is you're betting on GBP NZD to pretty much run this daily order block after it just did everything it needed to already do with this retracement, right? It needed to fill in those imbalances. Before retracing, a lot of times we manipulate internal liquidity. We have already manipulated internal liquidity. We already took that previous day high manipulatively. We never closed above it. We never displaced past it. We already took it manipulatively. So it pretty much completed everything it needed to complete on this internal retracement, right? So from here, you're buying into realistically nothing. You're longing in a position where there's nothing to long into. There's nothing to go and take. There's no reason for price to push up. Fundamentally, there's no reason for price to push up, right? Due to trade safe, right? You see it. There's no real reason for GBP NZD to just absolutely pump right now. There's no reason for it to, right? Can the bias change? Can news come out or something? Of course, right? We all know this. But as of right now, there's realistically no reason at all. So that's what you see there. So that's pretty much it. Just kind of give you guys a basic understanding of it. Again, I teach all of this stuff. This video will be in my Discord, but I teach all of this stuff in my Discord because I'll probably post this on YouTube if you guys are interested in learning market structure, because we're all literally calling it losing right now as everyone in the LSD space takes it. These trades can be skipped. You guys don't have to have a horrible win rate with this strategy. I'm telling you guys, I've traded this strategy for a year and a half. I've just talked to someone yesterday who has been trading it for over a year and a half, never found consistency. There is no consistency if you guys are just blatantly using this entry model. You have to pair market context with it. And that is what I'm teaching. So we're all, just sitting here chilling, watching this trade gonna lose. And yeah, so if you guys are interested in learning that type of stuff and learning literally what I teach, I literally have like 20 some hours of lectures in here on every single thing you can imagine. And if you guys do want to join that, I'll have that in the YouTube description. But if not, that's cool. We're just gonna keep on calling these trades losing. A lot of you a lot of you guys in the Discord are learning very, very fast, and people that's been in here for literally just like 2 or 3 days are already calling this trade losing. So yeah, we're gonna see how this trade plays out, and I will get back to you guys as soon as it does. Again, this is on 30-minute time frame, so it's gonna take a long time for everything to play out. But yeah, I'll see you guys on whenever this plays out. So peace. All right, boys, we are back with the GN position here, and another loss again that I called before the entry candle even closed here. So we're gonna give this time to, of course, settle and do its thing, right? Because people just got wicked out as of right now, right? Markets are kind of really choppy right now, right? So kind of got wicked out. We could easily consolidate here for a pretty decent time here. We also have Forex Factory speeches coming up here in a little bit, so market's going to be consolidating most likely for a little bit beforehand, because it's just uncertainty. As the speeches is going on, it's going to be, again, very volatile and stuff like that. But long story short, on the grand scheme of things, again, bearish bias, so no surprise that, again, we just continued with bearish price action. And like I said, once we get near the speech, you're going to see a lot of consolidation, lots of volatility. As we get closer here, I believe it's only in like an hour and some minutes. So I believe it's like 9:15 a.m. my time. So yeah, that's pretty much that trade. This is a 30-minute time frame. Some people got break candle entry, some people got candle close entry. Realistically, it wouldn't have mattered. You just get wicked out realistically right now, and yeah, again, we'll give it time to marinate and stuff like that, because obviously we could easily consolidate, still run to this fair value gap and stuff like that, and continue down while those speeches are going on, I should say, right? So but as of right now, everyone that actually took the trade would have gotten stopped out. So let's go through the bias one more time. I teach all of this stuff in my Discord. Every single one of these guys in this Discord all skipped it. There's dudes that have been in here for literally like 3 days, and they're already learning market context and narrative and the stuff I teach, and it's just simply like, oh yeah, this is a clear bad trade to take. While as everyone and all these bigger mentors in the space are feeding this LSD nonsense to you guys, that it's only the entry model. That's what moves the market. It is not true at all. I wasted a year and a half. Like I said, I talked to someone else that wasted over a year as well. You guys were running circles. So you can, don't listen to me, bro. But when you finish out this year, look back at your progress and realize that you will not see consistency. None of us have. So you have to pair with market context. This is the only trading strategy that does not have market context, because quite frankly, it takes a little bit to learn, and these guys don't want to learn that, bro. It's a lot easier to just slap up a simple entry model and then just feed it for course sales. It's a lot easier to do that. But I don't know about you guys, but I'm trying to actually become a professional trader, and I'm trying to find consistency in my trading. So when I applied market context, because this is the only entry model that does not use market context, that is when I saw consistency, just like any other trading strategy. So you have to apply market context. If you're not, you're just gambling. So we saw that price action was delivering to the bearish side, right? We were continuously putting in lower lows and lower highs, right? We had this retracement. What was the main reason for this retracement? The main reason was to fill in this inefficiency that price left, right? We ran really inefficiently, left imbalances within the market. We filled up all those imbalances, right? We mitigated all of these imbalances within the market right there, okay? That's great. What do we have right here? Well, we have a daily order block, while also we have a very interesting key level here with lots of resistance, right? Support and resistance, this is just a pure key level. That's all there is. There's nothing else to it. It's just a level of support and resistance where price reacted from multiple times before, right? We found support, resistance, 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 support, right? And now we're coming back down, and we're reacting off that same exact little tiny level again. So that's just kind of a little added confluence for you. When we drop down to the lower time frames, what do we have here as well? Well, we have bullish price action. Where specifically, where are we targeting? Well, the main reason is to fill in these imbalances. We already succeeded. We did that. We fulfilled all of these imbalances. We fulfilled where price ran inefficiently, right? So now we're in a daily order block, right, where selling pressure can start coming back in. We're at a key level where resistance previously happened multiple times, And simultaneously with that, it's not like price displaced all through here, right? And now we're coming back down to a supply zone. It purely manipulated this high to sweep all of that liquidity up to the buy side to then target sell side liquidity, right? So where's sell side liquidity? Sell side liquidity is resting down here. So like I said, you're gonna get a reaction. You're gonna get a reaction because there's liquidity there. It is a higher low on the 30-minute time frame. I'm not saying there's not liquidity there. There is liquidity there. That is a strong higher low. There's liquidity there. So it's going to take that liquidity and give you a reaction. But if you pair that with market context and you use trade save, like I was showing you guys this morning, you realize fundamentally there's no real reason for GN to just absolutely pump right now. There's literally no reason for it at all. So you pair that with the actual technical side of things, and you get a bias on it. And you get a bias telling you open-handed that this is a bad trade to take. Paired delivery is bearish. What I just drew, bro. But again, we have all this liquidity up here. We manipulated all of it. Again, what is that? This is previous day high. Previous day high holds a lot of liquidity, right? So you literally manipulatively sweep that liquidity, take all that liquidity. We didn't displace past with bullish volume, anything like that. We manipulatively took that liquidity and is seeking lower prices. Our first level to even seek is this level of liquidity, right? So to no surprise, you seek that level of liquidity and you get a little reaction. That is no surprise at all, right? That's how price works. When you take liquidity like that, you're gonna get a reaction. But yeah, it's all of these trades, guys. I'm telling you, from me to you, that you trade the same entry model. The entry model will provide about 50% of the trades that the entry model pops up can openly outright just be skipped. Like, the market is openly showing you its hand, and you're just ignoring it because you think it's too hard to learn market context, and you guys get blindsided by these mentors preaching a crazy win rate with crazy results. If you just take this entry model, it's not going to work. It's all a feedback loop to keep you in their courses. I always call it the golden prison because you have an illusion of progression. I'm actually going to have a YouTube video scheduled on that. You have an illusion of progression where you're constantly taking trades, so you feel like you're progressing and you're going to get better. You can't perfect a mechanical entry model anymore, but you can perfect market context. So if you guys keep wasting time just trying to perfect this market or this entry model, you can't perfect it anymore. You're just going to run in circles. So if you guys want to waste years like I did, go ahead and do that by all means. But I'm not going to do that. And my students in my Discord aren't going to do that either. So again, this is another easy skip that I've recorded before the entry candle even came out. I did the same thing on NASDAQ already. The YouTube video is posted. Again, not all of these I'm going to post on YouTube. A lot of these I just post in the community because I'm not giving away too much sauce here. But this is just basic market context. Okay, this is literally just pure basic market context. Again, the 30-minute time frame is going to move a lot more fundamentally than the 5-minute time frame. 5-minute time frame is going to move a lot more algorithmically, right? So 30-minute time frame, I pair technicals and market context on the higher time frames paired with fundamentals, right? That's personally what I do in the 30-minute time frame. So yeah, that's pretty much it. We've had 30-minute time frames have been pretty slow. I know there was this trade, I think like 2 others, and then there's GJ position, which I caught the GJ position. That was like 5%. But these other positions have been kind of low quality, and just the market's openly showing you its hand. And I openly, make a video on why it's going to lose, and it loses it. It's just pure market context, guys. But a lot of these guys in these communities, they don't teach it because, again, it's a lot easier for them just to teach this entry model, right? So yeah, hope you guys enjoyed this video. Again, I'm gonna put this on YouTube, but I'm also gonna put this on the Discord. So I'm kind of speaking to both people here. Yeah, if you guys are interested in learning market context, like I've been preaching in all these videos, and just literally openly cutting out your losses, the 50% of these LSD trades, guys, can literally openly be cut out. It's clear as day. It's literally just clear as day. It can openly be cut out. But you guys choose not to. I'm going to keep making these videos until you eventually catch on. So, yeah, if you guys are interested in learning that, I do have a community, and I'll put that in the link in my YouTube video. If not, it's all good. But yeah, pretty much it for this video. So I'll see you boys on the next one. I should have a YouTube video scheduled Friday, so I'll see you guys on that one. Peace.